Hey guys, how's everyone doing? It's Max. What time is it? It's about 2:35 here in Austin. See what's going on today. Okay. So sometimes this sheet works, sometimes it doesn't. It started working on SPX. It still doesn't work on WDTE. I'm subscribed to a service. Where is it? Marketdata.app. There's what it looks like. Anyway, we'll see how it works. I haven't had a chance to switch the date over yet, but the good thing is when I do switch it over, hopefully by tomorrow, these prices will update in real time instead of 20 minutes behind. Okay, but I did what I could. So today these guys sold the 58.50. Right now the market's trading at 58.44. Let's take a look at what that looks like. This is WDTE with the SPX at all-time highs. Or it actually looks like a rejected all-time highs. Did you see that? This morning's bar got over the previous days, couldn't hold. This is generally not a good sign, but we'll see. My volatility model finally switched to bullish today. Yeah, thanks for nothing. It's probably going to start selling off now. Anyway, we'll talk about the volatility model in a second. But you can see the market rallied this morning and was over, or it opened with a huge gap. This could be great for XDTE, but then it settled back down, reverted to mean, so to speak. So day's about over. Hopefully it'll rally a little bit and get back to max profit. All right, so triple QI, these guys sold the 20,214 strike. It's 5 points in the money. Let's take a look at that. Kind of the same thing. They open, now they didn't open at all-time highs like the NASDAQ. One thing that you could say is bullish is that the NASDAQ didn't reject its all-time high. Just the S&P did. But that's still not a good sign when you see that, just from a technical standpoint. But now that sign's negated as soon as they take out the all-time high and close, in my opinion, close 2 30-minute time periods above the all-time high, then you can consider that signal negated. But right now it's looking like the SPX is rejecting all-time highs. All right, well, so this one sold off also, but it didn't sell off far enough to get past max profit according to this. These quotes are live, so we're actually fine. These are still the delayed, this is still the delayed spreadsheet. And last time it pulled data, it was 5 points. You would have cost $5 to cover it. So instead of making full profit, they were only making 786,000. Okay, but right now in real time, we can see it bounced. You can see it was they probably pulled data on that delayed service about a half hour ago. It was just inside the max profit. And now it's outside. So hopefully we'll stay outside. Let's check out Russell or IWMY. All right, Russell or IWMY. This is, today it's weak. It's rallied. Or actually, it started strong. It started strong and sold off in the first bar. And it actually kind of bounced a little bit. But right now, we're at about max loss on that one. So we'll see what the spreadsheet says. It has a set of 5 point loss, but we only sold the options for 9 points, and it's saying we're losing 5. Once again, this is 15 minutes behind. So 15 minutes behind, we were probably only losing the smaller amount because the market was higher. Now the market's lower, so in real time. So we'll see how these settle. All right, USOY, okay. So these guys, they wrote the 78 strike put for $2.44. Unfortunately, they had to cover it for $5.77. I'll show you how that happens. Writing a put is bullish, and the reason they had to cover it for more is because the oil market sold off. They wrote that put when the market was up here and it gapped down, and they had to. This option went probably about 5 points in the money. I bet if we looked at that, that's 71. Yeah, the strike's 78. But let me make sure it's level. Okay, trying to make sure it's level. So, yeah, so they sold. Okay, so they sold the 70, or actually they sold the 78 for $2.44. They actually had to buy it back for $5.77. It was a short. On a short, you sell first and buy to close the transaction. Then they roll down to the 73, and they got $1.50 for the 73. So let's take a look and see what that looks like. What we're going to do is we'll put a line right here at 73, and then we'll pull it down about $1.50. So we need to pull it down to 71.50, to the level of 71.50. And it's close enough. Not really, but there it is. That's close enough. 71.59. Anyway, that's the general area we're aiming for. Anywhere in that area, and there's some degree of profit. Above that area, and it's full profit. Under the area, and it's a loss. What happened the other day where we got the big loss on USOY was whenever we gapped down. We had to cover this one for a loss. All right, well, we'll keep an eye on that. There's no way that I need to look at the dividend this weekend. It's just chronically too high, but this has been a crazy month for USO. So it probably will be a historic dividend, but, I don't know about that number. Let me do some work on it. Let's do some work on it. Well, shoot, how long do we have till declaration day? We don't really have that long till dec day, do we? Well, yeah, we do. I'm sorry. Yeah, I was looking at these numbers over here. We have like a week and a half. All right. I'll firm that number up by week. I wish it was 2. I wish it was 2. I could maybe go $1.65 right now. Anyway, we'll keep an eye on it. We'll see how these other options do. That was a pretty big loss for these guys. They lost $481,000. Okay, so let's go on to some yield max content. All right, so I'm going to sit down for this. This is the first day of this new feature. We're going to look at some ULTY trades. Okay. ULTY has 3 what I would call exotic trades. The rest of the trades appear to be covered calls. I looked really quick. If I missed one, but I looked at the latest position sheet, or the latest one I could find. So this is what I come up with. They have 3 kind of really interesting plays. So let's start with, they're all slightly different too. Let's start with, but basically, okay, to recap with everybody. So Jay put in a prospectus change with the SEC where he asked permission basically to do any kind of option strategy under the sun, or, anyway, it looks like they got approved, and they're doing some very interesting things right now, some things I haven't seen anyone else do ever. Okay, so let's start with Netflix. So what Jay did on this one, this is the most complicated one. Let's come back to Netflix. All right, so let's start with In-Phase. I believe this is called In-Phase Pharmaceuticals, or maybe In-Phase Exploration. I think it's an energy company. It doesn't even matter what it is. Jay likes it for some reason. I just want to show you the strategy he did. They own 80,000 shares of this. I think it comes to about 4% of the portfolio in ULTY. So they have 80,000 shares of the equity, but they simultaneously sold 100 strike call, okay, at $2.92. So that means they promised to sell it at 100, but held the stock's only at 92 right now. So that'd be a good deal. Plus, they received $2.92 for it, regardless if they sell it or not. At the same time, they bought the 79 strike put that expires next week, the 24th, 5th, next Friday. So the good news is they spent less on that than they sold the other one for. They sold the call for $2.92. They bought the put for 97 cents. So the difference is about $2. So you think of it this way. Think of this as a covered call they got $2 for, but it has limited downside. Look at the profit loss graph. This is the profit loss graph. So the most they can lose on the whole trade, remember I said it's about $4 million. The most they can lose on the whole trade is capped, a little bit less than $1 million. And that wouldn't be great. That's if the stock, but the stock has to pull back 30% or something. I mean, that kind of stuff happens. They don't have any losses under 79, under the 79 level. They have their losses capped, where a normal covered call loses all the way down to zero. When you do that, and when you do a covered call and then the stock drops like 50% of its value or something, and you do a covered call and you got $3 for it, and you thought it was such a good deal because you got $3, you feel like such a sucker when the stock's down 40 points the next day. Congratulations, you just lost 37 points. Covered calls are a rich man's game. And it's also good on stock that you really want to sell anyway. But this is a sweet trade. This is what's called a caller. They're selling a call, but they're using the proceeds of the call to buy a put. That limits the downside. Now, the disadvantage is if it goes to 100 or above, they're totally out. So if it goes to 110, they're capped out. The most they can make on this trade is about $717,000. The most they can lose is about $954,000. However, they received $154,000 off the start, and that goes straight to the distribution. That's where they pay the distribution with the credit. That credit's theirs to keep regardless of what else happens. And that's the way it is with every covered call. Now, that doesn't mean sometimes they might not have to settle a trade and pay more to settle it down the road. But the credit is what they're going for in income strategies, and that's what they pay you with. The good thing about, look at this compared to, this is your father's covered call. This is what happens when you think, oh, it's a good deal to buy this little exploration company in phase or whatever. And then you wake up the next morning and it's trading at 30 or 27 or something, down 70%, But yeah, you made whatever this is. You made $2.92 on the option. Good job, So all you do nowadays is sacrifice 92 of those cents. You only made $2 on your covered call nowadays. And you don't have unlimited downside. You don't have to worry about if it goes to 27. It's not your concern. You're done at 79. Okay, so that's a slick trade. That's a caller. I imagine he'll do lots of those. In the interviews with other influencers and then with me, I believe he specifically mentioned he's interested in doing callers. I want him to do something called a double diagonal or some other stuff, but we'll see if he does what I want. So far, he hasn't. Okay. So now let's look at the next. Okay, next one's American Express. I should know what ENPH is. I think it's energy. Okay, yeah, in-phase energy. Okay, so now one other thing before we go to the next one. Let's go to this in-phase energy. Okay, and it looks like Jay's did well. I don't know when he put that trade on. I just noticed it last night, but looks like he did a good job buying protection because the protection's coming in handy. I wonder if they had, what that means, if they had an earning. Maybe they have earnings after the bell today or something. Let's see what that is. Piper Sandler adjusts price target. Oh, somebody lowered the price target by 10 points. And they dropped by 10 points. Okay. Well, that's when it's a good job to buy protection. So nice job. All right. So next trade is American Express. Let's look at the chart. Okay, now it's blowing up. The opposite's happening on this one. So let's see how Mr. J played. This one. I did these this morning. I forgot myself. I'm having to look at my own notes. What the hell? Oh, I think I have this turned off, maybe? Yeah. Or no? Doesn't look like a very interesting trade. It just looks like stock to me. All right. Well, this wasn't working this morning also. Let me try. Let me hit refresh. All right. Well, this is an interesting strategy too. Oh, it's working. Well, we'll come back to this strategy. This strategy is interesting. I don't know why. I don't know why it's not working. I had no idea. All right. Darn it. Let's look at this last one. Now, this one's kind of the most complicated of all of them. I don't know what's going on with American Express. It was what it was, though. I can tell you it's up 375,000 according to this. I don't know why we can't view or edit it. Let's maybe go look at it from here. View, edit, trade. The profit and loss graph just shouldn't look straight like that, though. That's just not how the profit and loss graph looks. So that's why I suspect it's jacked up. That's fine. That's fine. But let's talk about what it is. What it is it's selling, it's writing puts. Okay. So it's just you sell a put and you make money if the American Express goes up, easy peasy. If it goes down, you have to, you either have to pay money to get out of the put or you have to buy the shares. You have to buy shares in American Express. Okay. Well, this is like a covered put spread. He already owns shares in American Express. They own 340,000 shares in American Express. And at the same time, they wrote a put spread, meaning they sold puts at 292.50, but they bought puts at 280. Okay, so the bought puts at 280 also cap the downside on this trade from being an unlimited loss. What they're doing, though, in essence, this trade is a double long on American Express. Okay, because it's long through the shares and it's long through the options. It's a double long because a put spread is a synthetic long. And of course, it's double long. But that's why this graph ought to look different. It ought to be a different shape. In between 292.50 and 280, it has a steeper profit loss graph because you're actually double long between those two areas on the graph, meaning you have double risk, but only between those two areas on the graph. Anyway, I'll figure out why that's not working. Let's go to Netflix. This was a really cool trade. At first, I thought this was an iron condor. This was a slick trade. Okay, this one's not working either. What in the hell is going on? I mean, well, I guess that's working. Okay, this is kind of a complex trade, but I like this trade. This trade right here, he has shares of American Express, but then on top of that, so this is like what's called an overlay. They have the shares, and they've overlaid a short put spread, and that was the same thing as the last stock. They sold a put spread, so they're going to be double long between these 2 points, just like the last one, 640 and 670. Okay, and at the same time, they took the proceeds of the sold put spread and they bought an out of the money call spread. So they're almost triple long here. This is a bullish bet. You could say it's a double bullish bet or almost a triple bullish bet. They're long through the stock, they're long through the short put spread, and they're long through the long bullish call spread. Okay. And they did the whole thing for a credit. That's important. The credit is the credit's what Jay takes to pay the dividend with. And then whatever happens to the trade, that will affect the NAV, but the dividend's set. The dividend's 90,000. That he'll throw that into the dividend bucket. That's just how they do it. They just take the premium they earn and put in the dividend bucket. So you can see if as time passes, this is a bull. The overlay itself, without putting the stock on, this is just the overlay. So this is the overlay without the stock. So the overlay, just the option trade itself, where you sell a put spread to buy a call spread, just a pretty generic bullish strategy. They're looking to make 800,000 and he's only risking 329,000. This trade has asymmetry because you can make, multiples more than you can lose. So that trade just by itself, that's a decent trade. I mean, that's a good trade by itself. And you can do that whole thing for a credit. It's a $90,000 credit, but you add stock on top and you make it like a covered, whatever that trade is. I mean, they don't need to be covered. So calling it covered is kind of weird. This, for whatever reason, it doesn't really look right. Let me try this. Let me try maybe like this. You can kind of see a variation in the line where the line bends at a different angle, and it's because of these spreads. These spreads affect the payout. Well, anyway, I'll look into that more, but this is an interesting trade. So guess what? He had this trade. I believe I don't know how long this trade's been on, but the stock gapped open this morning. And so these are from yesterday at least. So the trade's been on at least since yesterday. So they killed it on this one. So I wonder if ULTY is up today as a stock. They may have a bunch of other ones that are down, but that trade's killing it. Okay, well, they paid a dividend, so you can't really tell what they are. I guess they paid a dividend. What did they pay? 82 cents. Is everyone happy with that? I mean, 82 cents, it's pretty damn good, right? I mean, on a $10 stock. Anyway, all right. Well, they're about sideways today, so they probably have some losers, but that's good that they have that winner. And and Jay is using options that's the way to use options. Before, he was like fighting with his hand tied behind his back. A covered call is the most generic, but it's bullish. It's most generic strategy, but it does fine in a bullish market. But it's just kind of a generic. There's way, way better strategies out there with multiple options, and these overlay strategies are really cool. So anyway, congratulations. I'm glad ULT started doing some of them. Okay, so let's see what else we have going on. Let's see what else we have going on. All right. We have 1 minute left of the day. It looks like the S&P is going to WDT is going to get out with about 3/4 profit. Russell, oh my gosh, Russell is right on the borderline. 2280. When I say Russell, of course, I mean IWMY. 2280. I mean, they need 2281.85. 81.85. Let's see what the closing print was. Let's see. It looks like it's 80.84. Looks like they're probably going to be a small loss. Or 80.85. Anyway, we pulled forward. It's close. We'll check USO. All right, well, now let's look at some of the yield max stocks. Okay, the call spread report. We have some stuff working, some stuff not, but we can tell on here that Coney, Apley, Ybit, Coney, Apley, Ybit, TSMY, OR, those are kind of the ones that look good today. Now there's the triple threat spreadsheet. Now, by coincidentally, the ones that are, even though Coney's in the money, it's pulling back a little bit today. The blue line is if it's in the money or out. These other ones over here, these are ETFs that the call spread is further out of the money. But anyway, so yeah, Coney looks good, but the stock's pulling back, but not as much as the benchmark. Stock's back $1.87, or the ETF's back $1.87, benchmark's back 241. TSMY looks really good. Look at that. That looks great. Some of this other stuff doesn't work, so I really can't tell. It looks like Abney's outperforming on the upside, but I wouldn't be surprised. It looks like AMZ's outperforming on the upside. Good job. And NVIDIA. Man, if this becomes a regular thing, people don't realize, I think a lot of people don't realize how cool these call spreads are. Okay, MRNY is outperforming on the downside, so that's not good. And so is AIYY. All right, on the index buffer, SPY barely moved enough to register the index. It's basically straight sideways, but look, SPY T's up more than any of the other. Well, SPY T and SPY I win this. I was going to say SPY T and SPY I win the SPY category, but nope. XDTE wins by a penny. They had 11 basis points, SPY I, and SPY T had 10. Wow. Nice job, XDTE. Now, XDTE benefited from some positive path dependency, which is just a nice way of saying they do better if there's a gap up. There's an overnight gap up, regardless of what happens. Even if the gap doesn't hold, they do better, especially in a case where the market opens on the highs for the day. They essentially sold the high for the day with this strategy. I mean, they didn't mean to do it, but that's essentially what they did. They sold the freaking high tick. So that's a case when this strategy really works out nice. It also works out nice, like it has been lately, just when there's a bunch of bullish gaps overnight. 2 or 3 nights ago, there's a pretty good sized bullish gap. And also back on the 7th, between the 7th and the 8th, there was a big bullish gap. So all those together, that's why their XDT is killing it lately. Great job, XDTE. Okay, so let's see on some of these other ones. KQQQ, nice job, KQQQ. AIPI killing it. Look at that. Triple QI, the best out of all of the NASDAQ ones. That's saying something. And even after the refresh, oh, darn it. AIPI got it by 1 tick, but, well, I guess KQQQ is doing better as well. Anyway, QYY is doing well. Look at this. YMAG outperforming on the upside. That's huge. JEPQ outperforming on the upside, as is Triple QI. Great job. Look at USOY killing it. Outperforming by a pretty good margin on the upside. Boy, that's nice to see. Single stock buffer report. Look at this, NVIDIA beating on the upside. We already looked at it on another report. We saw that once, but it refreshed since then. Man, that's incredible. Abney and NVIDIA beating by a pretty good margin. Beating, that's really good. But don't forget about all YMAG doing it as well. Nice job. All right, guys. Well, I hope you like the ULTY report. I don't know why the option thing, these trades. Let me show you kind of how they should look. They should have different slopes to the line between the options, like 2 or 3 different places. It shouldn't be just a straight line all the way across. A straight line all the way across is the profit loss graph of stock. The thing is, when you use these overlay strategies with options, you can move the risk around. You can take it from one part of the curve and put it over here, put it over there. So, and that's what option strat does, is help us visualize it. So I'll figure out why it's not doing a good job visualizing ULTY, and I'll be back with more ULTY content tomorrow. All right, guys. Well, one other thing. Gosh darn it, I always forget. All right, so everyone's selling volatility now, finally. So my system, ever since 10 this morning, went back to bullish. For what it's worth, that's not worth much, because it's not worth much. System's been struggling lately, but it just follows the trend of, it's kind of a volatility trend following system. For a while, volatility is trending up, which usually makes the market trend down. So this red area right here was when volatility was trending up, and it gave a sell signal. But these bar charts is what the market actually did during that time. So it was not good. And anyway, this morning at 10, it switched to green. So now this thing is saying the trend of volatility is down, which means the trend of the market is up for the, until that switches. So I'll keep an eye on that and let you guys know. But that one's been interesting. Okay, and I think it's just in front of the election. Now, speaking of the election, has anyone seen Polymarket today? Polymarket was crazy last time I looked at it. It was 60-40 yesterday. Then this morning I looked at it and it was 62-38. Trump is spanking her. She's bounced 1 point to 39, but my God, he is spanking her. All right. Well, and this happened like in the past 2 days on Polymarket. So I just think that there's been a flurry of money come in on Trump's side, and that's fine. It's good if you're a Kamala fan, because you can monetize that by betting on her. If you're a Trump guy, stay off of Polymarket. If you're Trump guys, my advice would be go bet on Predicted. For one thing, drive the odds up on Predicted also, so people don't think Polymarket's just a bunch of Trump fans. If you guys have a bunch of money, there are a bunch of wealthy Trump fans, tech pros and stuff. I'm surprised they haven't driven the price high on Predicted yet as well also. And I imagine we see that. I imagine maybe they're trying to, but we'll see. We'll see. All this stuff is really fascinating to look at with just a few weeks to go. All right, guys, I appreciate you. Have a good day.